Mr. Andy Slow and I today are going to talk about our 2026 housing predictions. We'll talk about the real estate market, both micro and macro, to try to gauge where things are going to go in the future. And obviously, everything we say in this video is an opinion and a prediction. We don't have a crystal ball. We could go to war with somebody, the economy could crash entirely, and that would change everything. But I want to go through some micro, very hyper-local Albuquerque real estate numbers to try to set this up. Okay. And then I think your expertise is sort of in the macro as you follow the markets. And yes. Would you share with the listeners what your license plate says?
Oh, call put.
Call put. Yeah. We got the options trader extraordinaire with us today, who is constantly following the market. We have CNBC on constantly.
Yeah, CNBC.
CNBC?
Yes.
Did I say that wrong?
I think you did.
Of course. And I don't know where I was going with that. Oh, so after the micro, we'll get into the macro that will affect the micro. Okay, yeah. So from a micro perspective, of course, the real estate market, like every other market, is all about supply and demand. Yes. Currently, supply of housing right now is about 2,200 houses for sale in the greater Albuquerque area. During COVID, when prices were going up 15% per year, we saw under 700 houses for sale in the greater Albuquerque area. And last time prices went down between 2008 and 2011, we saw upwards of 7,000 homes for sale. And so that supply gauge, I think, gives you an idea of if we are going to see prices go down in 2026, we need to see a lot more houses hit the market. And then with that demand, right now we're at about 6.25% interest rate. They've come down a little bit, and we're expecting them to drop closer to 6, maybe under 6 in 2026, but we don't really know for sure on that.
The prices dropping?
Demand. Interest rates, which drive demand.
Yeah, I got you, yes.
So the point I'm trying to make is we need supply to increase significantly and we need demand to drop significantly for us to see prices go down. My prediction, just from a local perspective, is I'm expecting about a 5% appreciation in 2026 if all goes smoothly. Now, the things that affect supply and demand, employment, inflation, interest rates, all of those details. And just as we were talking right before this video, you mentioned that the experts are kind of mixed on where the macroeconomic stuff will go, unemployment and all
unrelated to housing.
Unrelated to housing, but do affect it to some degree.
Yeah, absolutely.
For example, just our micro level, economy is very dependent on government jobs. Sandia Labs, yes. University of New Mexico, the hospital system, a lot of that stuff is through the government. And when we had the government shutdown, I saw a decrease in the number of showings and activity in terms of demand in the local real estate market.
Yeah, I think that is just the psychological effect of the shutdown.
Right.
More than the actual practical.
Sorry.
I don't think anyone was missing a paycheck, I guess is what I'm saying.
Right. Yeah, my sister works for the labs, didn't miss a paycheck, but was just concerned about things moving forward. Didn't quite know how it would shake out.
To that end, they kind of a blip on the news, the House passed a bill that still has to go to the Senate that would prevent the air traffic controllers from not being paid, meaning they would be paid through any future shutdowns.
Oh, great. Yeah. That's another thing in our local economy. We have that big
FAA
regional station here.
Exactly.
Yeah. Well, that'd be huge. I hope they do that. That sounds reasonable.
They passed it through the House. It sounds like it's going to go all the way through. Didn't get much media attention, but it's I think a good idea.
Yeah, I think it's a great idea. Well, in terms of, let's just talk about maybe simply the stock market in 2026.
Yeah.
A lot of people, especially cash buyers, but also those that have, consistent employment, whether it's through the labs or another place with their 401ks and their indexes. Are we expecting, sitting here next year, the stock market to be higher than we're at now?
I think there's not total consensus, but I think a majority maybe do believe the S&P will hit 7,600 by the year end. The big question is how the AI investment goes.
Sure.
Which reminds me, I can't forget, I have a great video clip I want you to watch.
Okay.
Related to that. But most people, I think, maybe the AI bubble is 2 years out. So 2026 should probably be fine.
Probably consistent. Yeah.
And then we're in a rate cutting cycle, right? Which doesn't necessarily directly correlate to lower mortgage rates, but it does make money cheaper to borrow. And from the stock market's perspective, if you're in a rate cutting cycle, you can expect the indexes to go up.
Yeah.
Not straight up, but.
Sure. What about, so we talked about the stock market, which would be Wall Street. What about, Main Street? How is the local, what are your predictions for just the average consumer in 2026? Are they going to be in a better position than 2025? Is it going to be a little bit more difficult for them in terms of affordability, employment? What's the average Joe going to feel? Because I do feel throughout 2025, there was that uneasiness, yet consumer spending seems to not have dipped whatsoever.
Right. You get back into the psychology of it. I always joke that people love to spend money and complain about how expensive things are.
Yeah.
But I think that consumer confidence is directly related to the political environment where people aren't so happy with the politics, whatever side you're on.
Yeah.
So that reads into consumer sentiment, but then they still go out and spend.
Sure.
And as long as, they're spending, 70% of our economy is based on just going to the home goods store. It's pretty crazy. Yeah.
Home goods, Ross, and then grocery store shopping, obviously. And
we've got a great perch because we've got several retailers, which I think is a direct correlation to how the economy is going.
And I'll tell you what, parking in here has been chaos for probably since Thanksgiving.
Yeah.
Since the week before Thanksgiving, it's been chaos here. I tried to go to Uptown yesterday to do some shopping for Christmas, and there was a line just to drive into Uptown before you even get to a spot, and said, that's not for me.
Yeah.
So
it's just Albuquerque. Can you imagine other cities? Yeah.
Oh my gosh. Yeah. So people are spending clearly, and the economy continues to tick over. And so that's why I think, just as we talk about consumer sentiment, and I totally agree, whether the politics you agree with or you just feel like grocery prices are going up, that does feel with micro transactions like going to a Home Goods or a Whole Foods, I do get the feeling that people are willing to spend, but bigger purchases, there still seems to be a lack of movement in housing. We continue to see less and less houses sold compared to, years prior.
Yeah, it was a big conversation in the Fed minutes about how the housing market is really struggling. But I think that's more new construction. Existing, I think, of course, we see a seasonal slowdown.
Sure.
Normal. But I don't know, 2,200 houses isn't very much given the population.
Yeah, about 1 million people.
And I think it's poor selection.
Sure.
Coupled with with the fact that more than half of homeowners are 4% and below, and they don't want to trade up or whatever the metrics they are to justifying why they shouldn't buy a nicer house or a bigger house or a different house. But I think that's all going to change in 26.
Well, yeah, I get this feeling that there was so much movement in the COVID years.
Yes.
That we kind of settled down and into a new rhythm and pace of life after post-COVID. And now that we've sort of settled into that, and now I think 2026 may be the beginning of that unlocking, and the unlocking, or the things that locked into place, interest rates, political stuff. I think there's a number or a lot of reasons, a lot of homes sold during COVID that are keeping people put. But to your point, I do think we're going to start seeing that unease, whether it's macroeconomic stuff like interest rates come down, more homes being built, whatever that is, that may be a factor in it, but I don't think that's the leading factor. I think people are just going to say, I can't do it anymore.
Yeah.
We got to get out of this 1,800 square foot house. We have 2 kids.
Yeah, there's
we need
pent up demand. It's just building and building and building and building. And and this is not based on any facts, it's just intuition. I would suggest if there were a broader variety of homes available, more selection, that would spur, okay, I'm ready to buy.
Yes.
But I think a lot of people are probably misguided in the fact that they've been waiting and waiting and waiting for the rates to substantially drop. And they're just not going to.
Right.
I mean, at the best, we're going to see
upper 5s.
Right. I was going to say 5.5.
Yeah.
That's going to be Goldilocks.
That'd be a miracle if it was we get to 5.5.
Yeah. It's just, you can't get below that unless you have some
major
event.
Yeah.
And we don't want that.
Right.
Nor will we have that.
No, I just don't think there are enough signs pointing to that. Like those latest, people were complaining about the latest CPI report and how the numbers are
cooked or whatever. Yeah.
Right.
Yeah.
And even then, I just don't think there is enough data to show that we're getting into a huge economic collapse.
Oh, no, none of it is pointing to that.
None of that.
Yeah, yeah.
And as big tech companies continue to invest in AI and infrastructure is being built to support that, and as we see how that gets used, the latest reports on AI, which are really surprising, are that the economic stability of workers and their pay since AI has been rolled out in these companies has increased by about 30%. And so that's a good sign. Now, is that a sign of things to change in the future? We'll have to wait and see. Who knows how AI, and even these tech companies, though, if you talk to, or if you listen to any CEO, they say, we don't really know how it's going to be used yet.
Right. And that goes directly to the minus the sheer volume of money they're investing in it.
Right.
You're going to really be intrigued by this video when I show it to you.
Yeah. I'll be curious, and we'll link the video if you're curious about what Andy is saying.
It's very amateurish.
Oh.
I was watching a segment, and it wasn't a sponsored interview or something that was directly related to AI. It was someone who I find very, very smart, who just randomly did a 360 kind of circle as investment and where we're going to end up.
Interesting.
And it went under the radar, and I just had to tape it for you because obviously it's what we kind of hear. It's either going to work out or it's going to be a total disaster.
Right.
One of the two.
Now, one thing about the disaster, and I've said this all along, is I don't think it's going to be as big of a disaster as the dot-com bubble, only because they're not borrowing as much as they did back then.
They're just now starting to leverage up.
Right. And how much leverage they need in 2026, I think, is then going to start scaring people significantly.
Yeah.
Or, okay, if we're still rolling profits into it instead of borrowing significantly. And also the number of startups during the dot-com bubble was significant.
Yeah, and they all had bad balance sheets. These are companies that have great cash on hand.
Great cash flow.
So I don't think it will be an economic impact for the average Joe if for some reason AI isn't as successful as people think. Yeah. But it will be rather devastating to the indexes because there'll be a lot of drawback on.
Certainly.
Yeah.
Yeah, it feels like most of the economy is just kind of stumbling forward, you know, a slow growth, but the AI stuff is keeping the stock market so high. And so, we'll see if those bets play out. And, there's always the two sides of the coin. Don't miss out on the AI thing, or it's a bubble and it's going to,
Yeah, it's some musical chairs.
Right.
Somebody will be left without a chair, though.
Somebody somewhere will be.
Yeah, that's how it works.
Yep. And it'll be fun to see how that works out if you don't have money in the game. But if you have money in the game, try to predict that.
That's why I'm usually sitting on a three-legged chair, because at any moment it could.
Also, please don't take our financial advice. We are not financial advisors.
We absolutely not.
Just try to watch these things, and we enjoy investing ourselves. And so this is kind of our opinion on it. We're not financial advisors. Do not take this for financial advice.
I'm glad you said that, because now I have it officially documented.
That we're not financial advisors?
Oh, no, that you enjoy it.
Oh,
I've been ridiculed for bad advice to him, so now I have a document.
And I've been ridiculed for bad advice. But what I'll say is I do enjoy it. I just don't enjoy it as much as you, I think. Right.
Yeah, it's crazy.
Yeah, it is crazy. Well, I think that hopefully gives you, and I guess all that to say, we think it's going to be pretty regular, pretty normal next year.
Pretty normal.
We're not going to see a huge unlocking in a positive direction, and we're not going to see a collapse in the opposite direction. A 5% growth next year seems about reasonable. Beyond that, because of the investments in AI, it's really hard to say for sure. But we wish you a really happy new year.
Happy holidays.
Can't wait to see it in 2026. And we'll be back. If you have any things you want us to talk about in these videos, any questions, any real estate, design, Albuquerque, New Mexico, anything that you'd like us to cover in 2026, any topics, feel free to comment.
Yeah, send us an idea or two.
Yeah, feel free to email us. And we really appreciate you watching, liking, and subscribing. Happy New Year. We'll see you in 2026.
See you later.